Good morning. Good morning. Good morning. Boy, did Bagger get lazy. Holy smokes. And totally snuck up on me. Contracts roll, folks. They actually rolled on volume last Friday. Where was my head? Here I thought I had a caching issue. We have the continuous contracts here. I had to deal with some things. What happens is when you buy or sell a futures contract, not at TradeStation, but at other brokerages, the contract is what they call deliverable. Deliverable. The contracts at TradeStation are not deliverable. So if you buy a futures contract in oil, as an example, and you go to sleep and you forget to roll it, TradeStation is not going to deliver, and the CME is not going to deliver, 10,000 gallons or whatever it is of jet fuel or oil to your driveway. But other brokerages will. You're on the hook. You're on the hook. So that isn't the case. But what will happen is it will get frozen, and all you can do is close it. And if you don't close it, if you don't close it, TradeStation will close it at the end, sometime during the day, today, or at the end. Right? It has happened to me, um, 20 years, like once or twice. I'll say once, maybe twice. um, we It didn't burn us at all, but I was like, what in the world? So we just had so many things that we were working on, and it just was like bizarro. So we've brought back up swing machine. We tried to stay short overnight, and it burned us. Um, but still profitable for the week, right? And that was not a algorithmic trade. It was a mechanical trade on my part, maybe a bit reckless. But it is what it is. So we're punched up. Now, one of the things that we're working on, right, for the benefit of folks that are coming through on YouTube and for the benefit of annual members, we're back up live. We should be live on YouTube, public view, right? Are we? Yep, yep. There we are. Stream health, all good, excellent. The image should be superb, as good as we can get it. The latency, we got the latency down to like 2 seconds, which is superb. And I didn't think it was possible, but it is. So that's always good. So it's like we're sitting right beside each other here. Um, and that would be on everything. What was I going to say? Oh, and we have the live feed back up on the members webpage. So there's a couple of steps that we have to go through, and it takes us a few minutes to do that. We're exploring a tool um, now that is going to be this for the benefit of annual members. What's going to happen, as I understand it, is when we punch up on YouTube, sometimes we punch up um, publicly, and sometimes we punch up privately. Um, Whatever mode we punch up is automatically going to load onto the members webpage, right? So there'll be no delay there either. You won't have to wait 5 or 10 minutes for me to go. What would they call? I have to go. Currently, I have to go to the website construction, and I have to go into the back room, so to speak, and do some gyrations, and it's cumbersome. So one of the things that way we built the website anyways was to be able to do this sort of thing. And as I said to Susie, I say to everybody, it's like, and even the trading game itself, right, is a lot of times, you don't know what you don't know, right? And you keep learning, and it's just is, and you look back on it and say like, well, how hard could that have been, same thing, same thing with even the trading programs. Um, One of our members, Alan, and if Alan is out there, Alan, we will be working this weekend. Alan was asking about a concept that we have been nosing around, so we're bringing it back. He's also moved it up on the priority list for us. Um, what he wants, if I understand correctly, this we definitely can do this weekend. And if any, it'll be a beta for Alan. But if any other annual member hears us and wants it, and we'll let everyone know, he wants an alert so that if anything is moving into euphoria on the radar or into panic, he would like, as we understand it, an alert. We can do that, right? We can build alerts, but we're going to go further than that, hopefully even this weekend, but certainly maybe even into next week. And we'll see what we do. We got so many different things that we want to do, but if we can build it into an alert, we can build it into a strategy. And if we can build it into a strategy, then we can back test, then we can actually trade it and yada yada. So we're going to be going down that road too. All right, so this thing is pulling back here. This is a really pretty nice spot. Um, Very, very tempting. I don't want to. Let's just go and look here where we are on the VIX for everybody. Let me make sure that our feeds are all up and running. We'll say good morning and whoops. So we're a little early. We're a little early. It's the Friday before Christmas, and we thought, you know what, maybe there's some folks home and on YouTube and want to see something different. We can only play so much golf, although it's a beautiful golfing day today in Tampa. Beautiful day. Probably busy. Um, all right, so let me go do this. I'm going to punch this out to a few places. So the neat thing will be when we can do that, and we're pretty confident that we can. So when the members know, they don't have to be going to like YouTube and like, is he live? Is he not? It'll be like um, they can just go to the members webpage, and if we're live on something, whether it's private or public, it will be visible to them. If you're a YouTube subscriber, you're only going to get a public views, which are limited, right? Obviously. Um, but if you're an annual member, you get everything. And all right, so let's go here. I think we're good. Oops, oops, oops. What did I just do? All right. So this market is pulling back a little bit here off these highs. It's very typical. Um, so the contracts would have rolled last week, but today is an options expiration day. And let's just take a look at the VIX on a daily basis together. And what do we have? So we got the VIX at 40. So it's really in the middle, right? It's in the middle. So I wouldn't expect this market to run that much further than where we are right now. Let's go to the ES though. Let's take a peek and see what else we can glean. This is the ES. We'll put it on a daily. Well, that's odd, huh? Yeah, that's really odd. So the market, my interpretation here is that the market is not in proportion. Um, with the VIX at minus 40, with the VIX at minus 40, we would expect to see the ES up here at around 60, and it isn't. It isn't. Now, it might be a little bit later, but so the market is a little more. Now, Options expiration day, Susan doesn't even trade on options expiration day, right? And the reason for that is that it's just it can be chaotic, because and especially in the last hour today, right? So you want to get your trading done and out of the way, right? And not make too many, big decisions on an options expiration day because they're jockeying. They're jockeying. They're closing up. They're getting in position. Now, one of the things that we do see, though, so you'll see also a big, huge flush of volume in the last hour or two. It can be very chaotic, but a lot of times we don't see a hard sell-off on options expiration. This is anecdotal, but a lot of times we see it the very next day, like on Monday, Tuesday. So this is if you've been waiting, to kind of pull the trigger on a put or two. This can be a night, on a run up like this on an option expiration day. And I'm not talking about doing it like from Monday to Tuesday. I'm saying take it out to, we're December 19th, yeah, like January 20th, January 30th, maybe February 1st or 2nd, taking it out, giving yourself plenty of time. This can be a really nice place to do that sort of thing. Plus, we got the holidays. A lot of shit can go on. I hope nothing goes on, but the world's a crazy place, right? And then the first of the year. So this is a really nice time, to get ready for next year. And I would be looking on the dark side. Let's go look at the. Hey, what are you doing, Teddy? Why are you hitting my arm? What are you doing? Oh, he wants his breakfast. All right, I'll feed you in a minute, bud. I'll feed you in a minute. All right, let's. His food's already ready. He just very particular. Look at the daily on the NQ. What in the world? This is really, really odd for Swing Machine. Look at that. 3 days, we get a short signal, and we're under 12 grand. That is really, really odd. Um, so there's a couple ways to look at this, right? Look, and you might want to. It was 3 days ago. So Swing Machine went short the NQ at 24,898, and we're up here 600 points higher. And it's a daily, so he hasn't budged. He hasn't even ripped off the short. Um, so you could look at it and say, hey, Swing Machine booted it, and that's crappy signal. Doesn't get them all right. However, if you're savvy, you might say, you know something? That probably was a pretty good short down there. But he's gotten jammed. But that's okay. I'll try to improve upon it. And you might get short yourself. Now, how you get short is going to be up to you. Please, please don't over leverage, right? Don't. If you don't have the trading experience, you don't have the trading capital, don't come in with a mini or, 5 minis and, try to do that. Please don't do that. Don't. Take baby steps, right? You got micros. You also got options, and you could define your risk. You could go to the QQQs, and do something with the Qs would be the idea. But that is odd to us, right? That is very odd. Ted, all right, I'll be right back. I got to put this boy's food down, or he is going to leave my elbow alone here. I'll be right back. Okay, sorry about that. Hi, V. No, it's okay, Ted. It's okay. I can see him from my office. You're fine. You're fine. I'm not. I'm not mad at you. I'm not frustrated. Okay. All right. He gives me this look like, what the fuck is your problem? Like that Christ. I wanted to eat. Abby, female. Abby, take her out, does her business, comes racing in, eats anything and everything, just, can't wait to eat, and is great. I mean, she's beautiful. They're both beautiful dogs, golden retrievers. She eats, then takes a nap, but she keeps one eye open. Ted, he very, very fussy eater. Won't eat chicken, won't eat this, won't eat that, won't eat any vegetable. He's just a very picky eater. And yet you've heard me say you literally have to. I'm going to put this back. You have to sit with him. Now I don't have the time to sit with him right now, but it's kind of a. I don't want to say it's a nuisance, but sometimes you're rushing around. And he's like, no, you got to sit down. We got to talk sports, or we got to talk about the bitches down at the dog park or something. I don't know what it is, And you got to talk to him, and but he usually doesn't want to eat first thing. So we got to be careful not to put his food down because Abby will go and get a second one. So we go through this routine, and so I forgot to put it down. Then he'll come in, and they can communicate, and it's like it's 10 o'clock now, 10:30. He didn't want to eat earlier, and he hits my elbow, here at the desk, and he keeps flipping my elbow, and the mouse keeps flying around. And so I can see him outside my office, and I can fortunately see Abby. And Abby's pretty respectful. But if I get sidetracked and he should walk away, she'll scoff his food, which I think you heard me say the other day. But yeah, he's got his nose in there. But he wants company. He won't eat by himself. It's a funny thing. Personalities. So, um, so I'm still thinking that I know the market only goes up, Davy Day Trader. It only goes up. It only goes up. I know it does, right? It certainly does. It goes up more than it goes down for sure. Um, Bull markets. There's reasons for this, right? There are definitely reasons for this. Um, the asset gatherers, the stock pimps. I mean, if they told people like, hey, you get, send me your money, the market's gonna really get whacked like in the first quarter next year, they're not gonna send them any money, right? They're not. And oh, I gotta change. Make sure you change your contracts here. Oh, I don't have the right. Dang it. Do I? Let me look here. It doesn't look like she's even moving here. She is. Yeah, she's moving. Yeah, she's moving. Didn't look like it. So I do got to go through. I got a lot of other charts, So if you get your old contracts, the Z contracts, you got to get rid of them, right? These are the continuous contracts. We currently are trading, and we are short. Um, and I am short the uh, uh, the H contracts. This is a beautiful thing here. I love gap ups like that. And you just kind of lay back in the weeds and hit them. Um, yeah, it's a beautiful thing. So again, options expiration, and the now usually, probably, Christmas week going into New Year's, there's this, little euphoria into the air. Everyone's feeling kind of good. They're distracted. They're shopping. They're golfing. They're doing whatever, and there's a tendency for the markets to have a lift, right? A lift. However, however, um, there have been instances in the past. In fact, I think it was Trump's first term. Was it Trump? Yeah, I think it was Trump's first term, and we got a really, really hard sell-off. Um, the day before Christmas. And yeah, and his Secretary of Treasury at the time was that guy Munchin. He had the trophy wife. Remember that? And Trump literally had him paged as the story has it. Look at this sell off, huh? You seeing this on your screens? This is a beautiful thing. Now, what you want to do is just shoot against the high that was just established, right? Don't try to finesse it too tight. Just reduce your margin and just get a stop above that this morning's high and just relax. That's what we've done. It's up nice, and we just sit on it and let this thing come in. Um, let's see, we'll go back to the radar. So then what they did was they did some gyrations shortly after Christmas. Like the market opened the day after Christmas, which it will do, and they pumped in some liquidity, and then the market rallied, and it never kind of looked back, and it continued. Trump will do anything, man. This guy has no. He's, you know, I mean, I mean, he'll do anything, anything. People outside the states may not realize he's running commercials. I think he's selling steak. No, not steaks, watches. He's selling watches. Now, I don't even know if he's doing it for charity or if he's doing it, for his own charity. I mean, this guy is a salesman, you know. mm, I don't know. But so when it comes to the markets, will they pull any shenanigans to keep things inflated? They will to the extent that they can, and then events can overtake. I do think this continued push in gold and silver is telegraphing for those that are watching a problem. A problem. Um, and then you get through the Christmas season, and then there's an old saying: as the first week of January goes, so goes the year. I kind of like that saying from an investment standpoint because a lot of times, not all the time, but a lot of times it's true. And I would expect the first week of January to be a rough, and almost between now and that first week, I think it's going to be a little rough. I think the markets are actually topping out. That's what I think, but I don't necessarily trade what I think, right? And let me just pull up if there's any questions. Um, Get our analytics. Okay, I can see the chat bar. If you have any questions, it's very, very reminiscent to me into others, right? But it is certainly to me, and I lived and breathed it. And it seems like it was just yesterday, and that was the dot com stuff, right? And people have heard me say this, and it really is. And the dot com, the market, had been running all through the 90s, and it was phenomenal. It was phenomenal. But then in the late stage of the dot com, um, there were these other like little sub bubbles, and it wasn't just the internet. Everyone says it was just the dot com, but it wasn't. It toward the end, it got into um, fiber optics, fiber optics. Companies like Global Crossing and JDS Uniphase. And so what they said was, or what the spin was, and then all the telecommunication companies, that everyone was going to be on the internet as they were, and that they were going to have to build out the infrastructure, and so there was all this massive, and there was like real products, and there was a massive expenditure, especially by the telecommunication companies, into the backbone of the internet, right? And people were invested in it. And so this came in the late stage of the dot com. And so these were the last of the companies. And I had them. I did. I had them. And some burned me, and others, we were still, we weren't trading to the extent that we were trading now. We were traders, but not to the extent that we are now, and didn't have the tools and didn't have the high speed, right? It was dial up. And then, so what happened was in 99, and I don't have a chart to point to this, but I just, from memory, there was a little pullback. we thought that we were in a bubble, right? We thought, just as we think today, we thought we were in a bubble, and everyone thought that. But the question was, well, maybe it's different this time, right? Berlin Wall was coming down, Viagra was coming out, the internet, everything, glasnost, everyone felt great, right? In this year, 2000, and there was a little bit of concern about, the computers and all the four zeros and all that, and three zeros, where the computers are going to crash and all that stuff. So what we didn't know was they didn't know if that was going to do it, and they pumped in liquidity. The Treasury did at the time. So his pump is Trump and Besant, and Besant's a trader, by the way, by trade. Is he capable of pumping in liquidity to help out Trump? Yeah, absolutely. They're doing anything. They'll do anything and everything. But so we get the pullback in August, and I said to Susie, I'm like, this is it. And so we start in the summer, actually start liquidating, and I'm pulling out of everything. Should have pulled out of more. And I remember the broker saying, "No, what are you doing? You can't time the market. This is the guy." I'm like, "Oh, please." And one of the companies, one of the first companies, it was in the summer. We were actually on vacation. We are at Salt Spring Island, out in on the Vancouver Islands, and I get a heads up that Lucent Technology missed some some earnings, some whatever it was. It was in the July, and I had quite a few shares, and the bitch went from like 75 to like 55. And so I remember calling the broker from Salt Spring. I said, "Get us out. I want to get out of everything." He's like, "No, no, no. It's just the Lucent problem. It's just the Lucent." I'm like, "Get out of it." I literally had to fight with a guy. I'm like, "Get out of it." And so I had my whole list: get out of this, get out of this, get out of it. Don, you overreact. Get out of it. And then when I got back, and I remember being pissed, I was on vacation. I'm like, I don't want to have to fight with a guy. You don't want to, if you got a money manager that, isn't working with you, if you have one of those guys, I don't have any of those guys, don't need them, but, get rid of them. At least get somebody that you can work with. And that's not me, right? We don't make specific recommendation. I don't manage anyone's money. We have a few family accounts, but, that's family. But we don't, not a broker, not a financial advisor. So I'm just sharing the story. I remember the emotions and the uncertainty of it all, right? And no one wanted to let go, folks, right? No one. I didn't want to let go. I mean, we had been, buying some of this stuff since the '80s, and it was a great run, and so then we get back. Okay, I'll come when I come back. I'll be back in 2 minutes. Sorry about that. So, and I tell the story so that I'm not saying that history is going to repeat or that history always repeats. It doesn't. But it does rhyme sometimes, right? And there are some real similarities. So I want to describe something to you that went on in the dot com. Now everyone thinks like back that it was pets.com and all that stuff. It wasn't really. I mean that gets the headlines, but it was really the telecommunications push. And we had these funds called like Seligman Communication. I mean, I remember all the holdings, right? And I had them all. Lucent Technology, Global Crossing, Cisco, Intel, of course, yeah, Seligman Communication. And I mean, I am, in the summer of 1999, I am balls to the wall long and had been long, for years on this stuff. So this stuff had been very, very good to me, and I didn't really want to let go. I'm like, hey, we this I don't want to let go. No one wants to let go when you're an investor, when you're in an investor mindset. But I'm like, hey, we got to, because they're starting to break. And now I didn't have all the skills and I didn't have all the tools that we have today. It would have been a much, much easier decision. By the way, back then you could not short, right? Unless you used options. You couldn't short. It was against the law. It was against their rules. They wouldn't let you do it, if you can believe it. So the market pulls back in August, and we think that's it. And then she rallies like this, just like this, into the end of the year. I'm like, shit. Maybe it isn't. Maybe it isn't doing it. I'm like, damn. And so we just said, well, we're not redeploying now. We'll wait. We'll wait for the beginning of the year. And the beginning of the year opened up pretty good. And I'm thinking the same thing. I'm like, damn. Maybe we shouldn't have come out. Maybe we shouldn't have. And we just fortunately, I'm like, we're gonna wait. This is investment capital. This is investment capital is not tradable capital. It's for years. In obviously younger then, and so we had a different time horizon, and but just the same, we wanted to, and so we waited, and then in early March. Now there is nothing going on. There's no catalyst. There's no, Lucent had broken down in the summer, but they were still the most owned company, kind of like Nvidia. Lot of promise, most owned, darling, huge market cap, and you would never think. And but that was the only thing, but there was nothing else. And then in early March, the market starts to sell. I'm like, huh, you know, but it's like, okay, but it's probably just a dip, right? And it sells, and it sells. And in the span of 3, 4, 5 months, the NASDAQ and all those stocks, they're down 30%. 30. Like, all right, is this the place to get back in? Now, I did nibble on some, but it turned out to be way too soon. What was happening was the telecommunication companies, the big companies, who had been gorging themselves on all the infrastructure spend, and they were buying it, and they were generating the earnings and everything for all the global crossings and all of that. They started to pull in. They started to say, hey, wait a minute, we're buying too much. We're you know we're 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 overly prepared. And and then over the next 9 months, the market's down like 90%. All right, so today we've had a hell of a run, folks, right? We've had social media, we've had crypto, we've even had gold and silver, we had all this liquidity. But what is the big buzz? AI. AI. AI is going to take over the world, right? It's going to be like, and it is probably going to do that. And it probably is going to be bigger than the internet itself. Maybe. And there's been a big infrastructure purchase. What are they buying? They're not buying fiber optics. What are they buying? Chips. Who are they buying them from? AMD, Nvidia. And what is Nvidia and AMD and everything? What are they doing? They're doing something called vendor financing. They're actually into the financing business. Other companies did that, and that GE was famous for that. Um, but we're starting to see, that maybe, that they have overindulged, right? You see in the stories about the data centers, they're starting to cancel the data centers. So, Microsoft and all these other companies that were buying and building out huge data centers, and they're going to fill them with, AI computers to do this. And on top of it, some of them don't even own them, and they're also leasing out the computers, like AWS, Amazon, so that other companies and everyone can take advantage of AI. But but if there's a slowdown or there's too much capacity, then guess what? They're going to start canceling the development or the purchase and building of the data centers. Look at some of the stocks that build the data centers. One in particular that I like to follow is Iron Mountain, IRM. The stock is down 35, 40%. What the fuck is with that? Why are the data centers going down? If they're not going to be building the data centers, then maybe they're not going to be buying the chips. And what's going to happen now? All these companies, they bought all these chips, by the way. These aren't like potato chips. These chips are extremely expensive, and they buy, millions of these things, right? And they have a shelf life, 4 to 5 years. And you might say, well, they're going to deplete those and they're going to come back and they're going to buy more. Well, maybe, but maybe they won't do it as much. So I guess the comparison I'm making is that, leading up to the dot com bubble, we had this whole internet push and we had all these bubbles within bubbles, and it was great. It was great. And if you participated fully in this, great. But the end of the dot com bubble wasn't PetSmart.com. Those things got taken out too, but it ended with the infrastructure spend, which was real, and then it slowed, and then it went to shit, and it took it all down. I'm drawing the comparison to now, a bubble on bubble, a bubble in engineering, and that the last push was the AI. Is AI real? Yes. Has there been a huge spend in AI? Yes. Is it going to continue? Yes, but I don't think to the same extent. So, and look at the data center companies. Pull up the other these companies that build these data centers. Find out who the competitors are. You can tell me, like Iron Mountain, and some of the others. Because if they're not building the data centers, then they're not going to be buying the computers. They're not buying the computers, they're not buying the chips. Oh, and then guess what? It filters downstream. And the next thing we get to be, and the market's always faster, but if we start to sell down the first quarter of next year and we go 3 months down, we could be down 30, 40%, and in the blink of an eye, what the hell is going to be there to bring it back up? You know, and then the reality of it is, so you want to be thinking about it now. If you are close to retirement and you're invested balls to the wall, and you're younger than I am, I'm just telling you, I been there, done that. I know, I'm just describing it to you. So if it starts to rhyme and it starts to think, now there are some things that you can do without liquidating everything, to protect yourself. But there are these markers. So the data centers aren't doing so well. Um, we're starting to see some of the slowdown. Some of the chips are starting to get hit. We're seeing gold and silver run. That's usually late stage economic speculation. That's usually what that means. So we're paying attention to that. And then, now if we get that kind of a correction in the first half of next year, uh, and I mean, Trump, just kiss his ass goodbye, kids. I mean, he's going to lose the midterm anyways, man. You know, Folks like Marjorie Taylor Greene, they know it. He's done. I'm sorry to say. I mean, if you're a big, huge Trump fan, I think he's done. He's not going to carry the midterm. He's got two. He's got a very narrow, um, and it's really by his own doing. And so you got guys like that guy Bongino and stuff. They're all getting out of there. So then on the second half of the year, Trump is going to be truly a what do you call him? What do you call somebody when he's like a lame duck? He's kind of a lame duck now. He really is. And and him hugging. And I think when he hugged Mandami in the office the other, I mean, that was it. That was done. Yeah, Mike, he's done. He just his base has really been split for a whole host of reasons. So how are they gonna, the second half gonna be a messy. So now as a trader, it's gonna be nirvana. Okay, as an investor, the sledding is going to get really, really tough. If you don't have the tools, you don't have the discipline, it's going to be tough. It's the easy money. Um, just go buy anything and everything and it goes up, that sort of thing. Um, that's not gonna happen. No more than that happened in the dot com. Um, but the volatility and some of the best rallies occur during really bearish phases. So we will get these, vicious rallies, just like we had one here even in this morning. Vicious rally, and this is nice action right now. So the traders will, this is what we're built for. This is what we're going to do. But we're here every day in, day out, week in, week out. Um, time just keeps ticking, and you look at things and you get a perspective of where we are. We don't think about, the big picture all the time. But as the years, as we roll out of one year and rolling into the next, um, can't help but do it. And I think this morning's rally is a really good opportunity, to be raising cash levels, selling some profitable stuff. Don't worry about the tax. You can, and or some option activity, going into the first quarter, because I think it's going to get really nasty, really pretty quick. So anywho, I ramble on, but it is it is so. Now the first time, I'm pretty confident on this. Let me put it this way: I'm more confident on this than I was back in '99, 2000, because that was the first time that I was going through anything like that and seeing it for the first time and thinking, oh no. And there were people saying it, and I didn't listen. I listened somewhat, but I listened with a 10 air. And so we were primarily out of the way, but there were some that that really hurt. It hurts. Um, when when your whole portfolio takes a whack, and it's not obligated to come back. So I just want you to know, for those that are investing, it's not obligated to come racing back to the high. It can, it took the Nasdaq, from the high of 1999, 2000. It took it 10 years to get back to that high, and then of course, then it just went crazy. And that high was like 5,000 on the Nasdaq, and look at where we are. Insanity. So, anywho, any questions? Let us know. Hope you're having fun. Swing Machine's doing its thing. Let's just take a peek. Let's put the VIX back to a 5 minute. I'm sorry. And again, options expiration. So not much concern with the in the VIX. Market's been pretty complacent. Let's look at the 5 minute. The 5 minute swing went long at 2 a.m. I'm sorry, 9:20, 9:20, not 2 a.m. 9:20. The NQ goes long at 9:20. The YM goes long at 9:10. The Russell goes long at 8:40. Gold goes long at 8:05. Silver goes long at 8:05. I mean, that's real time what you would be up if you had them. Now, when I describe that, that the bigger picture type thing, the intraday action, nobody gives a shit about any of that, right? Which is nice, actually. So just understand that, right? Um, you're on the field playing the game, right? So we talk about, if this helps you think, this is the way I think about it. You have a stadium of people watching a football game. So let me go do this. I always kind of like doing this. So we'll draw a stadium here. We'll make it. I kind of can we do it like this? Now let's make it oblong. We'll make a stadium round. All right. So you got a stadium, and you have these folks that are. Let me get some markers. Let me use my little tools here. Okay. And they're sitting, you know, why is that red? Huh. I didn't think I could color that thing. Huh. Now they're red. And they're up in the skyboxes, right? And they're watching the game. And the game is being played way down here on the field, right? That's the that's the football field. This is the stadium. So they're up there in the skyboxes, and every once in a while they look down at the ball game, and they're eating, it's the hoi polloi. They're eating their shrimp and having cocktails, and they were all the Taylor Swifts of the world, right? They're having a great time. These are investors. That's where they should be. And if you are an investor, that's where you should be. You should be up in the skybox, just looking down, taking it all in, and not just have a good time. Don't get too caught up. You shouldn't. An investor should not be paying attention to the intraday traffic of the market at all on any singular day. None. They should not be paying attention to the day-to-day action. They should not. They should not pay that much attention to the monthly, maybe beginning the monthly, now the quarterly, now they got to begin to pay attention. These time frames are impactful for monies that have a multi-year view. And that's what they should be paying attention to. So you very well may have enough capital so that you have a bucket of money that is, investable money. And you may be young enough to have that sort of time horizon, right? But if you are 70 years old, you better get a grip. Okay? I mean, because unless you plan on living to be 150, you have a different perspective. And just because you're 20, don't fall into the trap too. Well, I got time. Yeah, you do, but you can also waste it as well. Um, when you get to be, at a certain age, you gotta, when you're younger, you're thinking growth, growth, growth. Makes sense. I think you should be thinking growth. I think you should be thinking risk taking and taking on more risk. I think so. In fact, I think younger people today aren't taking enough risk. They're too conventional. They're too out of it. They're not. I don't. How in God's name they bought into the hodling thing is blowing my mind. They should be taking much more risk. But when you get to a later stage, you want to be thinking about, you go from growth, you want to be thinking about preservation, self-preservation and preservation of capital. So in this football game, you have the investor class, and they're in up in the skyboxes, and then you have the swing trader, right? In the swing trader, and let's get some markers here. See if I can do this. Try to keep it the same size. And the swing trader, where's the swing trader in this? The swing trader is, they're in the stadium, right? They're inside. They're out in the elements. That's where they are. Now, some of them are under shelter, some of them, a little bit closer to the field, but this is where they are. And some of them have an obstructed view. Some of them are getting hammered. Some of them are really paying attention. They probably don't, need binoculars. They don't have TVs to watch. If they use the binoculars, it's to see the cheerleaders. They maybe see part of the field. And these are the swing traders. Now, the swing trader, from a trading standpoint, they also should not be paying attention. This may sound like heresy, because I know they all do, and it's a big mistake. They should not be paying attention to the intraday moves. They should not. They should only be paying attention to the daily closes. The only time they might want to pay attention to the intraday move is on a day when they know they're coming out for whatever reason, hopefully with a profit, and they're maybe trying to squeeze out a few extra bucks. But that's it. But if you put on a swing trade with options or with anything else, and that swing trade is going out, you're not an investor, you're not going out 3, 4, 5, 10 years, you're going out 3, 4, 5 weeks, you should not pay attention to the intraday. And they all do. And they're just hurting themselves and wasting time. And they make mistakes because they'll make a decision on an intraday to get in, and then they try to stretch the trade out 3 or 4 weeks, and that is a cardinal sin. See, it's okay to put a trade on. So the swing trader should be looking at a daily, basically a daily interval, maybe an hour, but it's got to be with a longer view, and but a daily, and the daily closes. And if they put the trade on with the expectation they're going to be in it for 3, 4 weeks or a little bit longer, and they come out 3 or 4 days later, that's okay. That's totally okay. What isn't okay is looking at an intraday chart, putting on a trade intraday, like on a 5 minute, and then try to stretch the thing into 3 or 4 weeks. You don't go that way. You don't take something small and try to make it big. You can go in something big and come out smaller, but you don't want to be doing that routinely. Okay, so like when Susan puts on our option, Susan places all of our option trades. I pick some, and I pick quite a few. She picks the vast majority of them, and as soon as those trades go in too, she puts in outlier profit targets on those things immediately. Sometimes, every once in a while, not all the time, but that outlier hit will get hit, like on the same day or the next day. Really, it's happened. Um, which is namely like a double. And some of these brokerages will only let you set, beyond a certain thing. So these are the investors. These are the swing traders. Intraday trading. Where are we? Where are you? Let me show you. Let me see if I'll make them hearts. Can I make them tiny? Because I'm getting so small. So, can I do that? I don't think I can. I'll try. They're here. They're on the field. They're in the stadium, but they're not sitting down. They're on the field. You are playing the game. You see the plays coming to you. So you don't have and when you're on the field, none of this other shit matters. Doesn't matter what the cheerleaders are doing. Doesn't matter, what the announcer's saying on TV, because you're not going to see it. Or at least you better not be. You shouldn't be listening to it. Shouldn't be paying attention to it. It's just a distraction. You're going to get run over. So you need to mentally, get your resolution and get into the game. It's only matters today. Maybe for the next few hours. Maybe for the next few minutes. So you're on the field with the players and with the referees and all the stuff. But you're looking to execute. But understand, these are the biggest, deepest markets in the world. Now, you're not trading against me or against Susan or against anyone else. All right? You're not. Um, but you have to understand there are grown men and women who went to Villanova, who went to Holy Cross, went to Harvard, went to Yale, the Ivy Leaguers. They grew up with a silver spoon in their mouth, and they got big debts, and they get their ass up every day, and they ride the train into Chicago and into New York, and they go up into those big gray buildings on a big gray day, and they go into a room or a boiler room, and they got a boss, and they got things, and they're trading just one market. They can't trade all the markets. They got one market, and they got to perform, just like a salesman, just like anything else. But they got to perform, or they're going to be out of a job. And they got the house payment, they got the summer home on Cape Cod. They got 3, 4 kids that they want to send to the Ivy League schools, and they want to make a buck. They don't give a shit about you. They don't give a shit about me. They don't give a shit about anything. They're there to make a buck. And their boss doesn't care anything about them. Just like anything else, they're there to make, the ones at Goldman Sachs. That's the reality of it. And they don't give a shit about Trump or anything else. They only give a shit about making their money, getting on that train and surviving and go back and do it another day. Now, they're extremely well compensated. God knows I wouldn't want to do it. I wouldn't. Why? Why? And then you have people, that have built successful companies that trade their own stock, or have people that trade their own stock, or have stock options. You have the people who have those big, big yachts. Damn right well that in those yachts they got big ass trading rooms. What do you think? Starlink. You think it's just to connect them to the weather? Hell no. They want to be able to see their bread, and they want to affect trades. And we're trading with them right here, right now, and we're on the field. So I guess, we talk about trade resolution here. You've got to think about, so the added challenge you have is it's up to you, right? This isn't monolithic, but um, you have to decide. You have so much capital, you have so much time, you on a daily basis, you presumably only have so much time on this earth. We don't want to think about it. We don't really want to think about it, but some, have more. If you're in your 20s, you're gonna have more. You got more time to do more than I do. It's just there is, statistically, right? We don't think about it. So, but you've got to think about what what you're trying to do, and then you have this capital. Maybe some of this capital is going to be investable capital. Maybe it's okay to do that. It's okay. But you've got to segregate that capital, and you've got to use tools to deploy that capital so that you can manage that capital in an appropriate fashion. It would be inappropriate. It would be inappropriate for someone who bought, and I know, so like, and this is, having these conversations, we have a number of members that bought um, thousands of shares of silver, SLV, when silver was trading at 21 and 22. It would be inappropriate for me to suggest to them, because silver on a 5 minute basis intraday is extended, that they should take that off. No, they should not. They should not. Now, there's other things that they can do. So you've got to segregate your capital if you are even going to invest anything, which is fine. I think everyone should, but treat it differently. And then swing trading. So do we invest? Yes, we do. Do we swing trade? Yes, we do. And what do we use out here? We don't use any leverage out here to speak of. You know, in here on the swing trading, we use options, and we use defined risk options. Intraday, day in and day out, we're on the field and we're trading futures. Why do we trade futures? They're liquid. They're highly liquid. The difference between the bid and the ask is like a tick wide. It's beautiful. Also, market access, right? We've been trading futures for years. The Nasdaq is just getting around now. Like, hello, they just asked the SEC, we think we might need to go overnight. Well, they don't. They're not. That's fine. They can have market access, but they're going to have a problem with that because they don't have any market liquidity. And what do you think that's going to do to volatility? It's going to be great for us, because they're going to be, flipping and, they're going to be all over the place. So this is, we're trading futures because they're liquid. We have market access, and they're leveraged, and it's responsible leverage. And our job intraday here, is to extract cash flow from the money flow, and then collect whatever the fiat currency is, and currently it's dollars. I know all those books are interesting to read, and then, the Jim Ricketts books, I've read them all. The guy couldn't trade his, you can't listen to a thing he says about trading or even investing. He writes great books on currencies, and, it can learn a lot, but just don't listen to him on anything else. You're just awful. You go broke. Um, but you collect these things called dollars, and then you presumably, you don't want to keep increasing your leverage, right? You don't do that, and you deploy, and you want to deploy presumably into something that's going to hold value. So you can deploy, you could buy, a timeshare in every, you know, in every major city in the world, and you own a bunch of timeshares. It's probably not going to be a good way to go. However, if you deploy into, what do they like to do? Look at what look at what the billionaire class does. Now, you may not be able to buy a $500 million home, in Hutchinson Island or in Jupiter, and I guess not in Jupiter, but that's what they do. Like, they love to deploy into real estate. Um, but you can take a page out of that. Look what real estate has done. You know, um, it's it's just going to keep going. But there are other things, right? There are other things. Um, but I think young people should be taking much more risk, calculated risk. Not risk just to take risk. I'm not talking about just, jump out of an airplane to jump out of an airplane, for the thrill of it. I'm just saying that they should be challenging themselves, and that your education doesn't cease because you got a high school degree, because you got a college degree, because you got a master's degree. Who gives a shit? You know, this time of year, and it's just, we're already, I mean, all the kids are on break from all the different universities, and we were all there at one time, and we all had it figured out. We all took that college professor that told us about how from his perspective how the world worked. He's still there on that college campus, touting that bullshit, and tried to fill our heads with a bunch of crap, and they think they got it all figured out, and then they never read another book, they never bother to get educated, and they go to work for who they go to work for, and what I'm saying is that that's just a start. Keep pushing, keep reading, keep listening, keep thinking, keep pushing out, because I've said, I have a tendency to have this little chat with everybody, not that often, but usually at the end of the year. It's always something. You've missed nothing. What you've missed is the skill set to discern, the chaff, the garbage from the good stuff. So everyone has, recency bias. Oh, if only, if only I had bought Nvidia. If only I had done this. There'll never be another one. There always is another one. They're there now, today. Some of them are privately held. Some of them have just started trading maybe in the last few months. There will be more, you know. And from an investment standpoint, I mean, you're going to see, I love these things at this time of the year. They're going to bring out Tom Lee on CNBC for the Contrarian News Bubble channel, which everyone, Peter Schiff talks about, which is great, right? They will tell you that today that Bitcoin is up 0.16%, woo, because they advertise this shit on CNBC, but they won't say anything about silver or gold. They won't tell you that silver's continuing to run. They won't even mention it. Yet investors or retail people listen to CNBC as though that they're going to get educated, or that, or they subscribe to the Wall Street Journal or something, like they're going to learn anything from that shit. You're going to learn nothing from that garbage. Nothing. What you will learn is when you start to track money flow. Now we're doing this much technically, but trust me, from an investment standpoint, I don't run a model portfolio. We'd rather teach you how to go about doing it during the Q school. But we're there, and I'm constantly looking for those gems. And there's a structure to get those, and we're looking for to track the money flow. But there's always, they could be privately held, they could be just coming public, and there'll be more. But it isn't a question like, and from investment, just picking like what's going to happen next year. And where I was going to go with CNBC is you're going to see these guys coming out over the next couple of weeks, and there's a number I'm trying to think. I can think of Tom Lee. He's the doofus with the big black glasses. And God, he's a doofus. He said that Bitcoin, when it was trading at 127,000. Okay, it's trading at 88,000. It's down 30-40%. He just said a month ago on CNBC that Bitcoin was going to be trading at $200,000 to $250,000 by the end of the year. Where is he today? Is CNBC going to haul his ass out and say, "Hey, no, nope"? But they'll bring him out. He'll just go away for a little while. Then they'll bring him back out, in January or into December, and oh yeah, it's just a little pullback, and he's got he's obnoxious. You got to pull him up online. He's obnoxious, and and he's got the glasses, and Bitcoin, I think that Bitcoin, Judge Wapner, I think it's gonna go to like $300,000 a coin by the end of the year. And I think this stock is going to, he could be talking about a stock, someone else will do it. And then what he'll say at the end after he does that, right? And they get their eyeballs, and there's going to be some poor slob out there who's going to say, oh, you know what, honey? This guy, look at how smart he is. He's got those big black glasses, and let's push the button and move $500,000 of our IRA into Bitcoin because he said it's going to go to 300,000. Oh my God, you know, people have done that. People do that. They know that. Disgusting. And then what he'll say, and what the other stock pimps will say, then some other guy will come out and say, well, I think the S&P just had a little bit of a dip, and then I think, and I think the S&P is going to go to 12,000 or 10,000. I think the Nasdaq's going to go to, 18,000. They'll just pick a number out of their ass. And then he'll say, this is the classic line. You'll hear him. You're going to hear him. And when you hear him, I want you to think of me. I'll be laughing. I'm not going to hear him. I don't listen to that garbage. I don't watch CNBC. Unless Susan's changing the station from someplace. But no, I haven't watched that thing in years. I don't subscribe to the Wall Street Journal, the IBD. I don't need any of that shit. Fortune magazine. Are you kidding? But what they'll say is, well, Judge Wapner, Judge, or Joe Bag of Donuts, Joe Kernan, Joe Bag of Donuts, or the other broad, Becky Not So Quick. Oh my God, these people, they're still there. And I did see Fox the other day. They were passing stations, and they brought out Maria Bartiromo. Oh my God, she's still around doing that shit. But what they'll say is this. Well, Judge, I think that the S&P is going to go to like 10,000 next year. But Judge, I'm not telling you that I know what it's going to do tomorrow. Or I'm not telling you, that I think what it's going to do, next week. I can't do. So he can't tell you. He's not going to speculate on this. He's not going to speculate on a swing trade. But he's going to tell you. He can't do that. But he can tell you where it's going to be a year from now. Oh, okay. Like, that's the easiest thing in the world. Of course it's the easiest thing because there's no accountability for that. Right? There's no accountability. He just picks a number out his ass. And before Tom Lee, let's stay with the comparison back to the .com. There was another guy. You can look him up. His name was Henry Blodgett. Henry Blodgett. And he was an analyst in the .com. It was the analysts that were the rock stars. They were the true stock pimps. And Henry Blodgett was the analyst for all the telecoms. And he was touting all this shit. And he was on CNBC. And he's touting and touting and touting. And I was listening to him. How come, hey, and I can maybe even talk, and I had a broker at Mother Merrill. And what does Mother Merrill do? They hire him. They hired him for millions of dollars. Henry Blodgett. Now, when the .com blew apart and the books were written, there were the stories about how Henry Blodgett was lying through his teeth and laughing about it to the people that were in the know. He was recommending shit that he was selling and that his pals were selling and laughing about it. He was prosecuted. He was banned from doing it ever again. And guess what he went and did? He laid low, sat on his millions, and he develops Business Insider. Business Insider was an online magazine. I think it's still there. Now, I don't know if he's still got a thing or he sold it. But that was Henry Blodgett. I mean, so Kramer, Kramer in the 90s, Jim Kramer. And there's been books written on him. If you do the Google searches, they try to scrub some of the videos. He ran a tiny, tiny, tiny little family hedge fund in a thumbnail of an office off of Times Square. He had like 5 or 6 people, but he was a touter, and he was on CNBC all the time, and he had a personality. He's got a big personality, and they loved having him on. And he started touting all the internet companies, and one of the ones that he was touting at that time was a company called CMGI, because it was an aggregator, he called it, and it was the same old stuff, and the same people are doing it here. Kathy Woods with Bitcoin. These people are going. You're going to be telling your kids stories. You're going to be telling kids years from now. Can you believe something? There was something called, Bitcoin, and they said it was digital gold, and everybody put millions and millions of dollars into it, and it'll be trading like for 5 cents or something, or a buck, if it's even around. It's possible. It's possible. Lucent Technologies was that most owned company. They had trucks all over the place. They had more trucks than Amazon has trucks. Every time you come out of your house, you'd see a Lucent truck around. They went out of business. Zero, gone. JDS Uniphase, zero, gone. Global Crossing, gone. WorldCom, gone. Sun Microsystems, gone. Gone, gone. But Don, the indices keep going up. Yes, because that's the game. They see, they don't, you're not supposed to sell anything. You're supposed to just sit on your ass, invest, and do nothing. Learn nothing, do nothing, just give them your money and hope. That's what they want you to do. Not me. Not me. You can do it. But that's what they want you to do. And um, it's gross. Thank God I didn't, work for any of these people, because I probably would have been inoculated with all this shit. It never made any sense. They never made any sense to me. I mean, we did very well, but I mean, I was exposed to it all. I went to all their stuff, right? They gifted us all kinds of things, and junkets, and go to their meetings and get shrimp and walk around, and listen to this speaker and that speaker about this company and that company and all I did all that shit. And it was like, oh my God. Um, let's pull up Iron Mountain, okay? So, whoops, not a heart. We're going to clear all that. So it's very, I started this by saying how similar this period is, and it is. So we'll see. I'm not suggesting that you do anything with your bread specifically. I wouldn't do that. I'm not doing that. I'm just saying, just get control of it. I have talked to some people and they say, Don, I hate to call my broker. He fights with me. He does this. He does that. It's your money. It's not his. He's not smarter than you. Probably dumb, I'm assuming he is dumber. And I'm the dumbest person in these markets today. I am the dumbest person here. I am the most ignorant person. With the exception of the brokers. They know nothing. Their job is to get your assets under management. Period. That's it. And see, where I come at is, and I hate using that plane crashing example. There's one thing that you can trust, and that's human nature. People want to protect their assets, their value, for the most part, unless they're drug addicted and, insane, or Marxists or socialists, or, and they want to go to, government-owned supermarkets, right? So we're not talking about those people. But we are talking about, and the people who have assets, who have worked to accumulate and say, hey, I want to play the game, and I want to have a nice life, and I want to have independence, and I don't want to travel for a company. I want to travel for my own, and I want to do it. They're actually playing the game. When I was a kid, I loved to play a game with my sisters, which was we had the game of life in Monopoly. I loved those fucking games. And getting them to play because it was kind of tough because it took so long. You got to play the game. Why not? And you could be a plumber, you could be an HVAC person, you could be an electrician, you could be a policeman, you could be a CEO, you could be the mayor of a town, you could be a professional golfer. We have all of that as members. We absolutely do. We have all of that. Doesn't make any difference. So let's look at Iron Mountain. Let's plug it in. Big data center company, right? IRM. Oops, did I get the symbol in there? Yeah, there it is. It's cropped off here because of my margin, but the symbol is, let me see if I can punch this over. Can I push that over? Yeah, I don't know why it's blocked out there. Iron Mountain. She's trading at 79.58. Now this is on a 5 minute. Okay, let's look at Iron Mountain from an investment standpoint. Let's drop it to a monthly. Let's take a look. Okay, she's dipping. Now, Swing Machine went long Iron Mountain 58 months ago at 37.01. Now I'm going to change the amount of money here, the purse. When we invest, we don't use leverage. So we want to change from the purse from futures. Let's change it. Let's make this false. And let's put in true. And let's put in, you put 50 grand into Iron Mountain. Okay, congratulations, right? You put 50 grand in 58 months ago, and I could actually put in the date. I won't take the time to put the date in, but at 37.01. Okay, well, if I'm an owner of Iron Mountain today, I'm thinking, hey, you know what? It's on a monthly basis. That bitch is dipping on me. She's slowing down. I don't know why. It could be this, could be that. We could look around. We got plenty of time. You know, what's going on here? Because she's not charging ahead. Now I'm up 115%. What might I do? One of the things that you could do, and again, this is your profit, right? So you could take out. So if you put 50,000 in at 37, you're up 57,000. One of the things you could do is just take out your original investment and keep an eye on it. But if that bitch starts to sell down, it goes short, then you maybe even want to take that off. So you could do something like that. You could take a portion out of it. Or if you had a broker that was paying attention, you could get some options around it, maybe to protect it or to hedge it. But your brokers aren't going to manage that shit for you. If you don't think you have the time, do you think they have the time? Now, there was a point in time when I thought, some of the early members, we actually discussed this. I actually met with lawyers and discussed, the prospects of developing a hedge. To be honest with you, it was just too too time consuming, to the risk reward wasn't really there. I was like, hey, we can do it for ourselves, but to do it, for the masses, or whatever it would be, it would just be, not worth it. So if you don't think you have the time, you think your broker is gonna, get on the phone, if you put him in, yeah, he's gonna ride it. I put you in Iron Mountain back at 37. That guy's never gonna leave me. I actually had a broker say that to me back too in the late 90s. Said to me, "Oh, I'll never lose you. You'll be with me forever." I fired him the next day for complacency. I fired him the next day. But now let's look at Iron Mountain on a weekly. This is what you could do for yourself without a broker. Uh-oh. A weekly 5 weeks ago went short. Huh. So, and it did it at 85.02. It's at 79.72. Maybe that's when you should have taken your 50 grand out. Or maybe that's when you should have got some options on it. Don't know options? Well, I'm sorry, you got to learn. I'm not, now we do teach and introduce you, but you got to keep pushing ahead. You got to learn. Oh, it's theta, beta, options, calls and puts, and I don't know. I just want to buy stock. Okay, fine. Oh, fine, I get it. Everyone's got. But what about the daily? So now this is the daily, the swing trader. No shit, Don. 27 days ago? Don, I am an option trader. You are? Yeah, and I talked to my guy and I got a subscription service, and they go, well, if you had gotten a put, this is 27 days ago. If you had gone short at 98, you got an 18% move between 98 and 79 on the way down. But there are hundreds of these, and thousands of them. I can't. No. The truth of the matter is, nobody, nobody can do this for you unless you take just a big ass block of money. But there's all sorts of restrictions, and some of these hedge funds are closed. And unless it's friends or family, and you give them a block of money, and then they just report on a quarterly. You don't know what they're buying, what they're selling. They don't have time, to hold anybody's hand. But these little corner offices, the Edward Jones or something. These people don't, I don't know what they were doing before. Maybe they were mortgage brokers or something, before. As an example. All right, so we'll put this back, but pay attention. And I just was focused on this data center thing because I'm like, Susie, I think this what's going on with the data centers the last few weeks is comparable to the fiber optic, to the .com, and I think it could be, and it could be why the Nasdaq is struggling here. And if the Nasdaq is struggling, now I'm not talking, now this is intraday, right? I mean, if we put Iron Mountain, on a 5 minute, I mean, does it matter? Does any of the fundamental or any of the other analysis matter? By the way, we got to put our purses back. So we come here to put it back onto futures. So we got to just turn off the stock. We set that as false. And then we put the futures back as true. And so I can just tell you so many stories, but you have to. It's got to be something you really, really want to do, and have a passion to do it. And I just like to do this. I just really, really enjoy it. It's a absolute hoot to me. But I come back to people protecting their stuff, right? In the human nature. So this is the way I think about it. You see those those plane crashes where people survive. The plane comes skidding down the runway and extends, and the wings on fire a little bit, and it skids off into the middle, and they come out and they're foaming down the runway, and the doors to the plane open, and the foam, the bubble things come out, and there's a stewardess up there, and they start sliding down. And you see the guy, and he's in his business suit, and he's sliding down, and he's got his briefcase in his hand. And then the next person behind him, grandma, she's coming out, and she's got her she's got a bag with her. They got their shit with them. Give me a break, right? But god forbid, god forbid, you're in a situation like that. The plane just skidded off the runway, the plane is on fire, the smoke filled, they're telling everybody out, and the sons of bitches that are between you and the exits are grabbing their stuff. So the point is, you're not on a plane that's done that. But if you're invested, you are. And when the shit hits the fan, what are you going to do? You're going to call the broker? The broker? What are you going to do? What do you own? A lot of people don't even know. They don't know what they own. They don't know why they own it. They don't know when they got in it. They just they call the telebroker, and my account is, oh honey, wow, we got $785,000 today. Oh wow, our account's up to 885,000. Oh wow, our account's up to 1.4 million. I know people that do that, right? They call the teller. Oh honey, we got 2.1 million. Hey, oh we feel good. Let's go out to dinner. Honey, the account was at 2.1 million. Now it's at 1.6 million. Oh, that's not so good. Now it's at 1.2 million. Oh, that ain't so good. Now that may sound like, oh, no, that's no big deal. Oh, honey, now the account's at 900,000. Oh, maybe we don't go on the cruise. Maybe. Oh, now the account's at 600,000. Now the account's at 200,000. But honey, they told me to hold on. It'll come back. Oh, you think so? You think so? Okay. Remember, remember the salary man in Japan, Nikkei, 1991. Nikkei hits 30,000. The guy's 42 years old. He puts everything in because he was told the same thing. It always goes up. Japan's going to take over the world. Nikkei was at 30,000. 2 years later, it's under 5,000. It took 30 years for the Nikkei to get back. That guy is now 72, if he's still alive. Did he weather it? Did he keep working? See, it's good for employment, though, right? Keeps everybody working. That's the little lie, right? And the government comes out and the Federal Reserve says, yeah, well, we're here to keep the dollar stable, and we're keeping the employment picture looking good. Yeah, they want you working until you're 90. I don't want you working, you know, at the mill. I want you to take your life from these bastards, and they are bastards, man. Trump included. Did you see where Barron? Barron's 80 million freshmen. I mean, talk about inside information. Everybody gets bullshit and pissed off about Pelosi. Look at what these guys are doing. You know, Barron's kids, won't have shit to worry about. That's what it is. So, anywho, I rambled on. Won't do it any further. The most valuable commodity of all. You've heard me say it a number of times. It's not Nvidia. It isn't gold. It isn't silver. It isn't Bitcoin. It isn't. It's time. You can waste it. I mean, you can't make it, you can't buy it, you can't sell it, you can't trade it, but you can waste it. You don't want to waste it. They say that when a person, but you don't have to be a billionaire to do this, right? But they say when a person gets to be a billionaire, money has no meaning to them anymore, right? They say like a $10,000 flight on the Concorde is like spending a dime to them. It's nothing. It has no meaning. What has meaning to them at that point is time, because they have it. They have all the wealth. They have, Elon Musk. He's got 789, I think, $1 billion. Money has no meaning to him. The homes have no meaning to him. It has no meaning. What does have meaning to him, though, is time. So he'll spend, presumably, you'll see these billionaires, they'll spend money, that you would think like you would never spend on it, but it saves them time. But you don't have to be a billionaire to value your time. So I would say to young people, value your time. Take more calculated risk and get more educated and challenge yourself. Challenge me. You remember here, challenge me. I like challenges. What about this? What do we do this? What do we do that? I'm all right with that. Totally all right with it. Um, and I enjoy the stock market caddy because because the trading is pretty boring, right? And I think boring is good. So I won't go any further. We'll let you watch. I was going to punch up at noon, so I'm going to let you watch the swing machine. Let's just take a quick peek at what it is doing. Let me just take a gander at our this whole time. I haven't even looked at a position. Yeah, we're fine. Um, let's highlight this. We look at the VIX on a 5 minute, and what did it do? It went short at 9:10. The 5 minute ES, what did it do? It went long at 9:20, 10 minutes later. Hmm. What do you think drove that? I mean, do you think it's because Ma and Pa Kettle are driving up I-95 and again they reached into their bag phone, which is what we used to do, in the late 90s? We had these things called bag phones, like cell phones, but they had a bag. You had to plug it into the cigarette lighter, and then you'd call your broker, buy me some more Lucent. You think that's what's moving the market today? Are you kidding me? These people are, um, you know, we'll talk about that. But that was at 9:20. Look at this one, 9:10, 9:40, 1800, 3100, 1100, 600 with a mini. So how much is that? Five, six, seven, $6,000 or $7,000 with a mini. Your job? Maybe get a couple hundred in the beginning. Maybe get 500. Maybe use micros, but your job is to get it. Now we sometimes get members say, "Don, I see this, I see it every day, but I don't get it." Well, what it could be is that you're making decisions on the money, purely on the money. Don't want to do that. We have one member, he said, "Don, when I started running the program, I was so uncomfortable I had to go down in the basement. I had to sit in the other room, and I'd hear the machine, order filled, order filled." And I'd come in and look like, "Oh my goodness." I'd go over and sit in the other room. Do whatever you got to do. You got to break yourself from it. And when you do break yourself from it, it's very, I got to tell you, it's very liberating. It's almost like a meditative state. Um, it's empowering. Look at gold, long gold at 805, 2200. Look at silver, silver, 6 grand at 9 a.m. 6 grand. I'm bagging on. This is Stock Market Caddy. We're ready when you are. We're going to let you watch. I'm going to shut up. If you got any questions, let me know. And by the way, I do want to mention for our annual members that might be passing by, we have a members website, um, SMC Pro Shop. It's a members website. We have a tab that's been there. It's been in development. It took us a while. We're still fine tuning it, but it's active. A live feed. You can punch that up, and we're going to have a live feed for you virtually from Sunday night at 6 p.m. to Friday afternoon, 24/7. And that feed will, um, have, now it won't be me talking, or doing that, but you'll have a feed, and it could be on any number of things. Um, for those that are on YouTube, we, do these public feeds, public YouTube, to create some awareness of who we are, what we're about, what we're doing, give you a chance to ask questions. But our annual members have um, all these tools on their desktop, right? So it might maybe helps them think like, okay, well maybe I could do this, maybe I could do that, and they're welcome to you know to to avail themselves of it if they so choose. Um, but it is learn to trade your game, and let me just go look here. Bear with me. Right now, we have to and we're going to put in it's going to make it, oh, I was going to say on the live feed for members, um, it's 24/7, 24/5, 5.5 days, 24 hours. But there could be, a few minutes each day where we got to reboot computers or reboot or something could go down. But, it'll be up 95% of the time. And, but not meant to, for anyone to necessarily shadow, but I suppose one could, but not necessarily to, to shadow, any specific trade, but um, that's the idea. But it is learn to trade your game. So I want to say thank you for everyone that's stopped by. I got to get to work. I'll be nearby. We're gonna let you watch up until about 1 o'clock on YouTube. Then that's gonna come down, and then manually, I got to go in manually and reinstall the live feed for members. I'm hoping that come Monday, we're evaluating product today, that that'll be done automatically. Whatever we're doing will be done automatically on the website. It'll save us some time. Any questions? Let me know. And the latency here is superb. We got it down. Latency means the delay, and so you're hearing my voice within 2 seconds. You're seeing the numbers within 2 seconds, and that's pretty. It's a vast improvement. And if you're watching on YouTube, you probably want to put it on, or you do want to put it on 1080p. It should be coming up at 1080p automatically, but if not, you go to your settings tab, set it at 1080p, and you have a much better image. All right. So what's the first of next year? I think it's going to be a rough year for the investor class. Um, I would be looking also at some of the. I know a lot of folks are bearish bonds. Um, but the government is gonna have to control the long term interest rates. They're gonna have to do something, and they will do something to control it because they get the debt as well. So if those interest rates, if we get some sort of a correction in stocks, I would think that those interests they'll do some stuff as they always do, um, to get those rates to bring those rates down. If they do that, then the longer term bonds are going to rally. So you look at things like now, I wouldn't go, doing this like today or tomorrow, but if you're looking like next year, the TLT is an ETF on bonds. It's got a dividend yield of about, this is for parking money, of about 4.2, I think 4.1% annual dividend yield. I think it's paid quarterly, and if the interest rates do come in, then you could see that rally. Um, TLT, of course, is off its highs when interest rates go down, the bonds rally. When interest rates rise, they go down. So interest rates have been rising, and so the TLT had a high of like 137, 140, and it is all the way down below 90. So long-term monies. I kind of like to buy long-term monies. I like to buy things that are fairly stable, um, but have some sort of growth or some sort of prospect. So we were, you know, suggesting gold. I remember folks when it was at 1700, 2000, but saying anything under 1700, be buying gold, even at 2200. Silver, we said anything under 25. Unfortunately, we had a lot of people that did buy silver. So I hope you're one of them. And the other beautiful thing about Swing Machine and these tools, they can help you, um, not only stay out of a market, but they can also help you stay into a market. So they help you not just get in, help you not just get out, but they also can help you stay in, right? Sometimes it's really important, and this is where the retail trader, they see their account growing, 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 and sometimes they just want to just stay put, but when you see things change, like Iron Mountain, all of a sudden, you're a monthly investor and you see the bitch dipping and you see the daily selling, all right. And then you see the weekly selling, oh, I better take some action here. Because if you wait for the broker or the broker to call you, that ain't happening. They never call you to sell anything. You know that. Good luck, everybody. Thanks. And have fun. Trading in the markets should be fun. It should be a source of enjoyment. You know, it is for me. I hope you enjoy it, and reach out anytime if you think we can help you. Thanks, everybody. We'll be. I'll say Merry Christmas, but we'll be here right up until, and we'll be here right afterwards as well. All right. Any questions? You let us know. See, we're just looking at the yields today. We have the 10-year. The yields are rising. The yield on 10-year treasuries is 4.147. 4.147. That's the annual yield. It's up 0.31. That's the biggest, deepest market of any kind in the world. The 10-year U.S. Treasury. Um, they're rising. The 30-year is at 4.827, also up 0.28. Now, the short-term yield is down 0.02. So the short-term yields are anchored because they cut interest rates, and he's got them nice and steep, and they're gonna continue to steepen till they can't steepen anymore. What to happen, and so it enriches the banks, it enriches the lender, but the borrower is they're going to have problems. So you're going to begin to see, I think you'll begin to see, cars getting repossessed and boats getting repossessed, and um, and I think the real estate market will be vulnerable. They begin to plateau a little bit, and and then when the shit hits the fan, you know, and a lot of the wealth, a lot of the spending is the wealth effect, right? Of the market. And when it goes the other way, it can be brutal. We still got a lot of folks say, and I think that'd be the case if the 10 years should ever get to, see, because when you stop and you think about it, let's think back, let's think you're retired and you saved $1 million. Okay, so back during COVID, or back during the 2015 and everything and all that time frame, if you had $1 million, the yield on the 10-year treasury, a safe yield, was like, I don't know, like point 0.1. I mean, it was ludicrous, right? I mean, you make like 5 or 10 grand, 20 grand a year, right? So there was no return on it. So you'd be like, oh, I can't, I got to get something. So they deployed into risk assets, and that's where they still are, right? They don't consider the risk, and it's been rewarded. But now that same person can go into 10-year treasury, and I just mentioned, the TLT is yielding, 4 point, 4.1, 4.2 is that's what the 10-year yield is. So, you could have, you get a 10-year treasury, you're going to get 41,000 a year off of it. It's still low, but it's a hell of a lot better than it was. Now, if you got $1 million and you got it all in the Nasdaq or all in the S&P, okay, you're feeling pretty good today. But if you take a 30, 40, 50% hit, you're not going to be feeling so good. Nobody thinks about the risk. We always think about the risk. And it's in everything. So that's why, when we're teaching, when a person goes through the Q school, on every single trade. Now, there are times when I will do, and I should caution to annual members, there are times that that I may do something if I am flush for the day or flush for the week, and I will take on a little bit more risk or very wide stop, something of that kind, right? So we're not, um, but the vast majority of the time, um, we, especially when we have the programs running, they have built in exits all the time. So they're in, and then as soon as it goes in, there are exits, controlling things. Any questions, you let us know. We'll be nearby, right? So I get the same visualization on this that you do, and beautiful thing. Greatest game ever. We said we're going to comment. Let's go take a look at some of the stocks that they got running. Let's go to the let's see, S&P. Booking.com is up 41. We got Monolithic Power Systems, that's 900. I'll stock up 32. Clack is up 28. Goldman Sachs, Government Sachs, they're up 19. Axon is the company that makes the police cameras. Probably a pretty good business. Trading at 583 a share, up 20. The chips are bouncing. Micron, Equix is up 14. Oracle up 14. Eli Lilly 13. FDS, which is FactSet, up 13. Hess up 11. McKesson having a nice day, up 11. AMD chip up 10. So they're bouncing the chips. Um, who is this? This is Huntington Ingalls HII up 10. iSurge up 9. Royal Caribbean up 9. They're getting ready for their cruises. Caterpillar got crushed the other day. Nice little bounce. Who is getting crushed today? AZO, AutoZone, down 36. FICO, FICO, Isaac Corp. I don't know if that's a credit company. Down 15. Um, Lamb Weston down 14. Ralph Lauren down 9. Home Depot down 8. Costco down 6. Nike 6. Lowe's 6. What's going on there, right? Maybe not a great. It's kind of a short season. Lululemon's been leading, down 6. Tesla down 5. We were talking about Tesla the other day. Remember at 480? If you had done the call credit spread, you're still fine. Time's decaying. She's not going to get to 500 this year. No way. Deere down 5. DHI down 5. Roper Industries, ROP, down 4. Darden, never bet against the pie hole, but Darden Restaurants, or is it, yeah, is it, yeah, Darden, down 4. Granger, GW, Darden is DRI. Granger, GWW, down 3. This is Sherwin Williams. Think Sherwin Williams down 3.5. That's kind of what's going on. Old Dominion. Let's go to our option trader and see what it's suggesting so we can give you some ideas. The options club selector. We got it's suggesting a put credit spread on Nike, put credit spread on Public Storage, PSA, put credit spread on AMT, put credit spread on MPC, put credit spread on LH. Speaking of Iron Mountain, it's got a call debit spread on Iron Mountain. That's probably a pretty good trade, even though I'm bearish on the stock overall. But I think it's probably not a bad trade. I might do a put credit spread. Lennar is a simple call. CCI, Carnival Cruise Lines. I think that's Carnival, isn't it? CCI? No. Crown Castle. Call debit spread. AA Advanced Auto Parts, suggesting a simple call. And then Tractor Supply, a put credit spread. That could be interesting. Tractor Supply trading at 51.37, suggesting a put credit spread. You could sell a put at 50, maybe buy a put at 47.5, maybe 45 for 35, 45 days. Probably a pretty nice trade. Boring trade. Not gonna, it's gonna be just, money's gonna accrue to you. That'd be a beautiful thing. On the short side, the tool is giving us Carnival Cruise Lines, CCL, put debit spread. These are all put debit spreads. Carnival Cruise Line, Albemarle, ALB, CHRW, GE, Unum, UNM, AIZ, SPGI, Starbucks, JCI, and Comcast, suggesting put debit spreads. Don't rush out, immediately and throw it on, but um, you might put it through your own little prism. We can't possibly know what your prism is, your approach, right? We don't know. Monthly members, we can't even know there too. We can give you some trade setups, and we can give you what our algos are showing, but we don't know what skill set you have. You may not even know. Um, that's what Q School is all about. And so before you become an annual member, you would go through the Q School for 3+ weeks. We get to know each other really well. We get to find out what you know, what you don't know, and that's fine. And there's going to be things that I don't know. You got to educate me too. So that's one of the rewards of doing Stock Market Caddy. I learn a lot from working with everybody, and and we but what our um, especially our approach to swing trades. So we're just hanging up here. Again, options expiration day. So don't, if we're going to get a move, it's going to come in the last, probably the last couple of hours. I think early next week is going to be, I think it could be nasty. We have a tool called the Nicholas. Let me go tell everybody what. Now, Nicholas went long. Let me go get this. He went long on November 24th. On November 24th, he went long all the markets and short the VIX. He ran up from being underwater a little bit to being up over 40 grand. Then he pulled all the way back, right? When we just had this recent dip, we got a warning, our members got a warning, and we said we could turn down or we could be getting ready to pounce back up, and it surely did. The Nicholas, the long call, stayed put on November 24th, but the VIX gave us a warning on the 17th, and then on the 18th, which was just yesterday, it said, nope, we're back on. And that Nicholas has gone from basically being up only 5,000 is now up real time 29,000. It's crazy. What does the Nicholas timing model measure? It measures the data of each of the indices. It measures the data of the VIX, and it measures the yield on the 10-year Treasury. It's a beautiful thing, kids. Now we run it broadly. It's not optimized, so we run it broadly when we report on it. But if you have it on your desktop, you can optimize it a little bit and with profit targets and drill down into it. But it's a wonderful tool to let us know, are they buying or are they selling? Right now, they're still buying on a like a swing basis, right? And of course, the investors, are going to be like, they won't even, they're out golfing, which is great, right? can also take a look at Bitcoin. Let's put Bitcoin on a monthly. Okay, so 27 months ago, if you had gone on Bitcoin at 950, you're up 182 grand. Good for you, right? Good for you. But it's dipping. If you were monitoring, just looking at, I'm not saying they had to trade it, but what happened on the daily? The daily went short 47 days ago at 112. So you didn't have to sell your Bitcoin with just a little bit of management. If you had a stack of these digital Bitcoins, in your vault down in your basement, we don't have basements in Florida, but then again, there aren't really tangible Bitcoins either. So if you had it, in make believe land someplace, um, but you could still have hodled them. But if you had five of them, if you had shorted five, or one futures contract, which represents five coins, you would have saved 22% of your drawdown. Michael Saylor never tells you that. Nah. Or that guy Pompliano, the pumper. You know damn right well if they still hodl them, and they probably don't. Michael Saylor probably does, but you know damn right well he's hedging the shit out of him. He's not going to tell anybody that. He's got pros doing it. And then on a weekly basis, this would have my attention. Weekly, 5 weeks ago, it went short. It's underwater a little bit by 2%, but the fact that the weekly is shorting, I'm not going long Bitcoin here. If I'm a long-term investor, I would have wanted to hedge it on the daily. Then if the daily goes long, I still got my Bitcoin and I just kill the hedge. But in the meantime, keep the hedge on. Playing for the middle. See, new traders, I don't even want to say traders because it's just new people. They don't have any trading skill. It's kind of like saying a new golfer, but someone who doesn't have any golfing skill. It's like a new person that, takes his new clubs out onto the golf course and, doesn't know what to do, doesn't know, it's just, smacking it around. Um, all they're interested in doing is just, hitting a shot of some kind, but they're not playing the long game, they're not playing a round, you know, and so most of the people that are involved at this level on Bitcoin, that are buying it at 127, they just, are pushing a button and throwing caution to the wind and throwing everything in there. Wow. Yeah, that usually is, the sign of a top, and it can be absolutely debilitating because when this shit comes back, they'll still things will still be there. Bitcoin will still be there. Iron Mountain will still be there. Apple will still be there. Nvidia will still be there, but they won't have any more cash. These fiat dollars to buy anything. The whole thing on Bitcoin, anyways, just kind of blows my mind because remember when it first started out, it was the Bitcoin is just learned. We knew about this, years ago, decades ago. Everything about fiat. If you read the book The Creature from Jekyll Island, which was written like in the 80s, right, 70s maybe. If you haven't read it, you want to. If you haven't, don't have the time to read it, 800-page book, I get it. Just go to the author's YouTube view, and there's about 10 to 12 one-hour sessions, and I suggest over the holidays that you listen to it. So the Bitcoin people, found that out like in 2010, 2011, and so Bitcoin was going to, replace the dollar. Well, that was bullshit. That wasn't happening. That wasn't happening. It's not happening. Isn't happening. Not going to happen. And they knew it. And then it then, I'm not saying you can't, buy some things, with Bitcoin, but but it's not going out to the masses. It isn't, not my view. And I don't mean to piss anybody off, but then it morphed. They dropped that idea and it became an asset, an asset, always valued in dollars. There seemed to be some sort of dichotomy in that. It's like this digital something, that's more valuable than dollars, but yet it's valued in dollars. And if you want to do anything with it, you basically got to convert it to dollars. So like what? And then this digital something is going to be liberating because it can't be tracked. Oh, okay. Okay. So you mean the dollars that I have in my safe or in my pocket and I go to the store, I guess that can be tracked, but my digital shit can't be tracked? Seriously? You think so? I just don't get it. I do not get it. Now, can you make money? Yep. In fact, let's put this Bitcoin back to 1 minute. Um, you can make money. You can make money in bubbles. You can make money in anything. I mean, look at Trump. Trump's selling watches for Christ's sakes. I mean, he's not even doing it for charity, I don't think. Let me know if he is. I mean, I'm seeing, an occasional commercial at lunch with Susie that, go buy a Trump watch. What's next? Trump steaks? We're going to do that program for Christmas too. I mean, but digital gold. I mean, gold is going up day after day after day. Silver's going up day after day after day. Remember all those people, Sailor and Pompliano and the Pumper and all those things? Right? Yeah, well, you can't carry gold around, Dawn. You can't carry it in your pocket. There's that guy Yusko, him and the other little guy. I was gonna use a bad word, but on Saturday mornings when I'm doing my programming, I sometimes punch up their podcast. Oh my God. I mean, circle jerks. I'm sorry. It's like, come on. But you can make money in it. I'm fine. Just learn to trade the damn thing. Jesus. So here, we're not trying to get the very high. We're not trying to get the very low. I'm not trying to get the next Amazon. I'm not trying to get the next Apple. I just got to get, and is the market rigged? Yeah, the market's rigged. Of course it's rigged. Of course it is. Everything's rigged. We're finding that all out, right? It's always been rigged. All the stuff is rigged. Let's just stay on the side that's rigged. Let's just do that. Ethereum, that 5 minute is going short right here, right in front of your eyes on a 5 minute. Now I don't. I'm not trading intraday Bitcoin in Ethereum, but maybe I should be, but maybe others are. I don't. But we put it up because there's an interest. If anyone wants us to plug in any of their stock or any of their market and give you an algorithmic view, I'm happy to do it. Right, happy to do it. This view of Swing Machine Plus is just one tool. It's just one tool. We have dozens and dozens, approaching 70 proprietary indicators, show me studies, paint bars, and yes, strategies, trading robots, even Swing Machine. So if you didn't pull the trigger at 920, the machine would have pulled the trigger if you armed it. If you didn't arm it, it would have popped up and said, hey, 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 look at me. Get your ass over here. I'm trying to go long the NASDAQ at 25,372. And if you looked at your stochastics and you looked at the 2 over the 8 moving average and your RSI and then the market profile stuff, and you just looked at this and you looked at that and you looked at this and you looked at that and you said, nah, I don't think I'm going to take it. Well, then, okay, then you don't have the 4 grand in your pocket. Sorry, but you don't. If you shorted it, you're down 4 grand. I think it's going the other way. Okay, well, then go right ahead. So you don't have to take them all. If you took the trade and you made $1,000 and you got out, congratulations. Good for you. Just stay out right now. Just stay out and wait for the next bus. Wait for the next tee time. When the starter says, you know, the 2:15 tee time is up, and you get your little ass over to the tee box and get ready to tee off. If you miss it, you miss it. So it's really relaxing. Here's this little Ethereum. I'm not sure how much margin this is. Probably quite a bit. You know, short at 29.72. Not sure about the liquidity either. I haven't traded it, even though it's there. I don't think I've ever traded it. Now I have members that have made a fortune, a life-changing fortune off of Ethereum. So that's so totally okay. But they got dollars. You know. Any questions? Let us know. You want us to plug anything in? Let us know. We'll let you watch. 'm actually going to do a little test. I'm going to test the latency while I'm chatting with you through YouTube, right? So it used to be like 30, 40 seconds. I don't think that's going to be the case. So let's do it at different times of the day here. Just going to test it myself. I'm going to get a little stopwatch. Bear with me. Reset. All right. So I'm going to open this up. YouTube. All right. I'm going to open up the volume, and then I'm going to count to 3. And at 3, I'm going to hit the timer. One, two, three. Shit, I messed up. I gotta do it again. One, two, three. 3.75 seconds. Sorry about that. That's fast. I mean, that's pretty good, right? Now, if you have TradeStation, right, and you're looking at the screen and you have the radar on, um, we're all getting it, provided you have high speed, right? And we have the highest speed that we can get. And if you do, and you're wherever you be, if you're in Germany or you're in Canada, wherever you be, you're going to get the same price view at about 10 milliseconds. 10 milliseconds. Isn't that crazy? Comes through exactly the same thing. It's crazy when you stop and think about it. And the blink of there are 1,000 milliseconds in a second. 1,000. Blink of an eye is 400 to 600 milliseconds. So if you're watching on YouTube, you are at the 1 hour interval. Raul, let's go look. Thank you. So we're going to change. Raul is asking the NQ, what is it doing at the hourly level? So let's go look. We just come here and we'll set it at an hour. 26 hours ago. So that's not 11 a.m. today. That was 11 a.m. yesterday. It went long, Raul, at 25,366. Now, if you did that with a mini, you're up 4 grand. If you did it with a micro, you're up 400. But what if you did it with an option? Yeah, you're welcome. You do it with an option. I would still want to track the futures, right? I mean, you could put this would be interesting. Let's put the QQQ in here, right? So you would do the option. Now, I've never done this. I've never done this. So let's change this to an hour. Let's see if it's the same. 60 minute. No, it isn't. See? It isn't. The QQQ, that is the QQQ. Yeah, the QQQ went long like 2 hours ago, right? Why is that? Well, I think I've always done this. Even before I was trading futures, I always felt the futures is a bet on the future. And it's leveraged. And it's where the banks play. It's where the hedge funds play. So I think the movement on the futures is much more significant than where the QQQs are. That are the ETFs and the masses. I mean, they're out shopping, man. They're not paying attention. They're not here. They're not, you know. I mean, if you had to trade 100 shares of the QQQs, that's $60,000. 60. So in any case, kind of interesting. We'll put it back. But thank you. Thanks for the question. And we'll put the NQ back to a 1 minute. Now we're saving space. We used to do 135. My favorite time frame is the 3 minute. The hourly is Susan's favorite time, Raul, for trading options, for just that, the 1 hour, because the 1 hour signal on futures, you can get a couple of trades off sometimes in a day, but not normally. Usually, we have seen hourly. This is crazy, right? We have seen hourly signals on the indices last for 2 weeks. 2 weeks and run up 20 grand. I mean, it's possible. I don't think it's likely, but that the 60-minute NQ stays long all the way to January 5th. Possible. Possible. And let's just take a look. Let's put it back to the 60-minute. What else can we glean from the 60-minute? See where it is on this part? Don't forget this part of Swing Machine. She's at 90. She's really extended. So if I had put that trade on in that direction and I was up 4 grand, or Susan's up 4 grand, and it's at 90 up here pushing into euphoria, we're probably gonna take it off. Especially if it's an option, because of the liquidity and stuff, probably gonna take it off. Now we have Alan, and Alan might be listening. Alan, I promise I'm going to do this for his. He's got a Swing Machine on his desktop. See, you can set. Have you ever used tick chart or range chart? Yep, all the time. Yep, all the time. I think range bars are probably the most accurate, mathematically the most accurate. Yep. And so you can actually you can have trades going in, but you can also set alerts, right? So we can turn on the alert is disabled. You can enable this to alert when this thing triggers. This thing triggers when you get a 2 in here and it's shrouded in white. What Alan has asked us to build into his Swing Machine, he wants alerts. He wants the capacity to activate an alert when something gets into euphoria or into panic. because he wants to know about it. And so we're going to build that this weekend. There's no one's ever asked. But we're also going to take it a little bit further, and we're going to probably develop it into a strategy. But I guess you are using time chart. Well, this is set on time, so let me go and show you. Let's say you wanted to use on radar, right? And so this is just a radar, right? But we have other charts. I have other screens with other charts you're not seeing. But if I wanted to put the NQ on a tick chart, I wouldn't put, I'm not going to track it on a one tick. I think that would be kind of crazy. Let's do it just for the sake of it. It's a little crazy. Yeah, no, it's just going to be like, just crazy, noisy. That's just trading at a one tick level. Um, but what if we did this, and we have done this? I know where we're at. Do I have it set up here? I don't. All right, so what we did do not that long ago, let me see if I can do this. Bear with me. Add blank row. Add a blank row. All right, so we got. All right, I want prime numbers. You would think I would know what these are, but bear with me. I think it's 1, 3, 7, 11. I want to use. Now you could use Fibonacci's. But what we were using was okay. All right, so we're going to put this on a tick chart, and we're going to set it at 200, which is a prime number. 200 ticks. Now, tick in this place is not a trade; it's a transaction, and it could be dozens of contracts, right? But the first 200 transactions. And then we're going to do, let's do this again at NQ. And let's set this at the next prime number. Hopefully I don't get robbed here of space. And that is 300. 300 ticks. And at NQ, and let's set that at 700 ticks. I can get in here. Nope. Get the idea. Oops. What did I do? I made a mistake there. 700. And the next one would be 1100. Let's see if I can see this in. 1100 ticks. These are the first prime numbers. And there you go. So you got them in transactions. 200 transactions, 300, 700, 1100. Now, if you watch this for a week, I got to tell you, and you do it with a lot of things, a lot of different things, you will begin to notice, which one is the more meaningful one. Now it'll vary from market volatility here, but let me just show you right in here. It's usually right in here, the belly, and it's usually the 700, 500 right in here. And notice that you can just tell by the amount of money. You're going to get more trades off here, and they're going to be smaller. But these up here and this one in here is going to do quite well. What's nice about this, about the radar, is that you don't have to even be, ideally, if you trade from it, you don't need to be looking at a chart, and because you can get chart blindness. I'll let you watch. I got to take a quick break. Any questions, let us know. I do need to take a break though. I got to have lunch with Susie. And but thanks for the question. I'll be back. Okay, Don's back, but I will be leaving for the afternoon. Um, so we're going to need to bring down. Oh, also, just comment, Raul. So we can match, right? We can put swing machine on a tick chart, on a range chart, right? Which would be a beautiful way to go. Absolutely. And you could set it at 1 minute. You could set it at 200 tick. You could set it at 700 tick. You could, you could, um, you could be going long on a 700 tick in Q, and you could be taking 5 micros short on a 200 tick. What would that do? You'd be hedging. Why do you hedge? To smooth out your equity curve. That's what hedge funds do. Retail traders, what they do is they push a button and they put $500,000 into Bitcoin and then they lose 30-40%. Hedge funds don't do that. No, they hedge. They hedge. Maybe we do that next week on something. We'll give it a thought over the weekend. Um, we've had a productive week. It wasn't as good as we had hoped. It wasn't a high watermark, but we were profitable and we had a very nice week um, on a lot of different things, but namely on the NQ. Um, Contracts are rolled on volume last week. We're now trading the H contracts, which is the March contracts, H26, and the options, the monthly options, weekly options are expiring today. So expect the markets to get really volatile and racy this afternoon, and I would expect normally because of where we are, because of the options. I know it's the Christmas week. I still think that you're going to see some profit taking. Certainly by I think by Tuesday afternoon, but maybe a little bit more on Monday, and then we'll go pretty quiet. Could it happen this afternoon? I could. It could. Um, and But folks are wrapping up. Wrapping up the year, and as we're doing too. If you're have any interest in what it is we're doing, monthly members are unlimited. Annual members are limited every year. We only issue so many licenses. And you must go through what we call a Q school. It gives you a chance to work with the tools before you become an annual member. It slows it down, but that's a good thing. We have Q schools that are scheduled. We have folks that over the last few months we're scheduling them for various times throughout the year. So it's first come, first serve. And If it is something you want to do, let's be sure to at least talk on the phone, say hello to each other, make sure it's what you want to do and it's what you expect. Make sure you have all your questions and happy to answer them, and then we can go from there. All right. If you complete the Q school, 3+ weeks, and you're happy, and you want to become an annual member at that point, then we're going to give you 30% back. 1/3, 30% back. It's not a Christmas thing. It's just we do it in June and July. We've always done it to help you to keep moving forward. Your education is your education. You're never going to do it again, and then you're underway. And then you get to do what? You get to play your game. Your game. Any questions? Let me know. And again, at 1:30 here, we will need to bring down the YouTube. Annual members, just know once we make that transition, we will then reset. We got to do it manually for the moment, but we will reset your live feed on your members page. So if you want to watch Swing Machine the rest of the afternoon here, they of course got it on their own machines, but they might. And with that, we're going to say thank you for stopping by. Have a wonderful weekend. We'll be kicking around all through the holidays. And if you got any questions, don't hesitate. Thanks. Thank you. Last night, we well, for the week. So you were tracking. Yesterday we had a wonderful day, um, and I put on some mechanical trades. So I'm drawing a distinction, Raul, between mechanical and robotic. So for the and you could do this. Don't get scared with the sums of money. But our beginning balance for the week last Sunday was 42.5. Um, we had the account at one point yesterday. I want to say like at what 49,000 or so thereabouts. Um, we had a couple of losers that came back. I think we brought it back down to like about 48. I made a decision, probably not a good one. I didn't appreciate the expiration, and I put on a mechanical trade, and that sucked me back. Um, so we finished the week. Um, yeah, I did. Yeah, I put on. That wasn't so. That was mine. Yeah, that was mine. It wasn't the machine. Um, I would have. I would have always, almost always do better with the machine, but I thought I could do it again. And so we ended the week just underneath 46. So it felt like we had a really it was a good week. It was a profitable week, but it felt like we had a really good round, and I kind of double bogeyed the last hole. That was the feeling. So, but remember, remember, um, don't join Stock Market Caddy. Don't join anybody if it's your plan just to follow them. Um, I would I would strongly suggest if you're going to do that, that you just give a block of money, not to me. I'm not soliciting funds. I'm not. But there are traders out there, legitimate. You got to make sure they're legitimate, licensed, approved, and all that. That can trade money for you, or a mutual fund or whatever. I would do that. But if you're going to try to do it yourself, I mean, you want to do it yourself. And once you do that, if you come, you got to come to grips with this. Um, Nobody really cares what you do. Nobody does. Trust me, Raul. Our members are very nice people, very generous people, very serious people, very disciplined people, but they don't really give a shit what you do. They just don't. And they may not even give a crap what I do. They only give a crap, and that's okay. I don't take it personally. We want everyone to do well. I want them to do well, but even our own trading, I've got to I've got to take responsibility and just do it. And same thing even for Susie. I mean, she's got a block of money, and that's it's on her. Otherwise, I told her, it's like, well, if I got to be responsible for it, then why do I have you do anything? I just take the block of money and I just do it myself. So so in any case, Rico chart gives a better. It isn't. No, I'm not going to say that any one chart. Um, if you're looking, and maybe where this is born from, if you're looking for a holy grail, Raul, um, we're going to keep looking. You're going to keep looking. But the reality of the situation is there isn't one, right? I don't think there is one. But we're going to keep looking, right? It's fun to look. We get better. We can get close. The Holy Grail isn't a Renko chart. It's not range bar. It's not swing machine. It isn't the C points. It isn't the hedging strategy. It isn't put options. It isn't market profile. It isn't RSI. It isn't stochastics. It isn't moving averages. It's there isn't. It does not exist. It's not even Nicholas. Nicholas is very good, but it's not a holy grail. The holy grail is you. It's you. It's you. It's what you do. It's what you choose to do and how you go about it. And then you got to execute. And I don't want to finish on a sour note, so maybe I shouldn't. But I had a gentleman that he didn't make it. He didn't go from. He joined for an annual and then he fell apart. I was actually surprised that he joined as an annual. I even told him because I was he went through the Q school, and when he started out, I'm like, well, I didn't even ask. I said, I don't know if this is something you really want to do. He's like, no, I do. And so we talked about it. One of the things that I had to point out to him was how he talked to himself. And he said this on the first day, the second day, the 10th day, for the whole 3+ weeks. I heard it every single day. And what did he say? I always lose, Don. I always lose. Now, we helped him and he did well through the 3 weeks. He did. He got better. He learned to win and he learned to, to make money. He had a profitable. But I said to him at the end of the Q school, I'm like, I don't know. We got to talk about the mental aspects of this. I don't know. And I told him, I said, you got to listen to how you're talking to yourself. I said it on the first day, actually. He said, whoa, 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 wait a minute. What do you mean you always lose? I mean, then why did you come to Q school? Why, I mean, I'm not a psychiatrist here, but, why do this? And they were like, okay, yeah, I always, yeah. I'm like, but he just never let it go. And he went off on his own, on the annual, and and I'll just leave it at that. I mean, he reached out, once or twice, and but it was the same thing. I always lose. I always lose. And I, the Holy Grail is you. It isn't enough to say that I always win. That isn't enough. That isn't. You have to apply. You have to execute. You have to, work on your, the confidence. I can't give anybody confidence. So it is confidence is born from successful execution. So you prepare, you plan, you execute, and you do it over and over and over again. You're not going to win every single time. It's not going to go in a straight up. The account's not going to finish the week after week after week on its high. I can't beat myself up. The account had a high water mark of 49,000. Uh, you know, yeah, it stings a little bit, but it's over. I get another week. It was profitable. No big deal. Away we go. Um, you have to do that. But if a person, where they can come in, if you come in um, undercapitalized, and you can put in $250,000 in your account and be undercapitalized, right? If you use too much leverage, if you come in, you're undercapitalized, don't have enough capital, don't have enough time, don't have enough patience, don't have enough discipline, and you psychologically are like, I always lose. This is rigged. You're dead before you even get going. And if I pick up on it, I'm not saying to you, Raul, but if I pick up on that, um, when we talk on the phone, there's certain cues. It's not that you haven't an interview, it isn't, but trust me, we don't have we have every year we're hitting our limits on new members. So I don't concern myself with that, and if I get a whiff of that, I'll politely just say we're not going forward because I don't want to waste your time. If a person's going to be, and I'm not saying you, Raul, right? I'm not saying you personally, but so I just in the broader context there. That makes sense. um, the mind is an incredibly powerful thing. Were there moments? Were there moments when we first started that I had doubt? Yes. Were there moments where I wanted to quit? Absolutely. Did I? No. Did Susan? No. And in fact, that's really the good thing. Now, Susie and I have been together since we were seven. I was 17. Susie was 18. Um, she wasn't going to let me. It's like, Don, we can't go back. We can't go back to that. You know, the broker world. We can't go back to that. So we have to keep moving. Like, okay. The scene. Where did stock? And this actually comes to. And I'm human, right? So the year is 2012, 2013, 2012, I think it was. We started this in the early 2000s, and Susan and I are watching the movie for the first time. I think it had been out, but it was Bag of Ants. I don't know when that movie was made, but we were watching it, and probably a rerun. But um, and there's a scene where the golfer has hit the ball into the woods, and it's I forget the actor's name, Matt Damon, and he's in the woods, and he bends over, and he begins to tremble, and he begins to shake, and you hear while he's in the woods. Now he's hit a golf ball in there, and you're hearing screams and yells and cannon shots, and like it's a war, right? It's a very powerful scene. And you stop and think about it. And he's trembling. His hands, brrr, he's trembling and he's shaking. And you're like, what is he going to do? Is he going to just collapse? Is he going to cut and run? And then enters the bagger, the caddy, which is really just in his mind, right? I think in the movie they say it. But and he walks around him and he says, hey, what are you doing? Well, you don't understand. He goes, what do you mean I don't understand, right? I don't remember the lines exactly, but he's still bent over. He says, you don't understand. He goes, what do you mean I don't understand? There isn't a problem in this world that, other people haven't faced. What are you doing? And he's grappling with that. And I watched it, and I wasn't thinking about golf. I was thinking about what we had done, where we were, where we had come. We had already turned the corner. And I stopped the movie. This was like, Jesus, Don, what are you doing? I think we had a little popcorn there and a little napkin, a little drink. I said, Susie, I said, do you remember when we first started the trading? Oh, geez, Don. Yeah, I do. But it's a good movie. What's on your mind? I said, Susie, I wonder if there are other people out there that are trying to do what we've done, thinking about doing what we've done, and maybe we could help them. Oh, geez, Don. Okay, okay. What are you thinking? And I'm thinking, I'm thinking that maybe, that we could have we could be like stock market caddy for these folks and teach them what we've learned. Okay, Don, write it down in the napkin. We'll talk about it tomorrow, but let's get back to the movie. Okay. And I scratched out the notes, stock market caddy, and started, and I just couldn't. And then we get up the next morning and, watch the great movie. And I said, hey, remember? I'm like, yep. And so I had and I couldn't stop thinking about it. I just couldn't stop. And I'm like, I didn't know anything. I didn't know if there was anybody out there. Twitter was just coming out of the ground. Um, I just didn't know how to build a website. I didn't know anything. Should I be on Facebook? I didn't know anything. We had some programs. We didn't have everything. And all Susan said was, okay, Donnie, you can do this, and I hope you do this, but under a couple of conditions. Number one, this thing, Stock Market Caddy, cannot take away from what we've done. I'm like, okay, that's fair enough. Because she was concerned that it might take time away from her own trading. And I got that. She said, I can't have that done. We've worked way too hard. It can't take anything away. I said, okay. And then she goes, number two, there's going to be an expense here, and there is an expense for all these tools and stuff. There is. And she said, so we're business folks. I understand you want to do this, but we got to pick a time frame, 6 months, a year. It's got to be operating in the black. I'm like, okay, that's fair enough. And I'm just trying to think what the other was. I think that was really basically it. And then we got started, but it took a while, right? And we really didn't even know where we were going. So Stock Market Caddy didn't come out of the ground until well after we had felt we had turned a corner, and it was simply because I was really pretty bored, and I love Stock Market Caddy and you know the business of it, and I consider all of our members friends, and I want them to do well, and hopefully in some aspect have helped to help them improve their trading life in some way. I hope so. Maybe it impact another way. I hope so. But there's another aspect to Stock Market County that happened that I did not anticipate at all, at all. And Susan will agree with this. By doing it and by meeting all the folks that we've met, um, it helped. We got better and we developed more and more tools, more and more things. I wish I could have done them faster. I wish I could have done more. I still have so much more that we want to do, but there's just like so much time, in one day. But I didn't anticipate that. It made us better. And from that standpoint, then we try to, share it back. Um, we do share it back. I mean, everything. Anytime anyone, especially annual members, see anything on our screens, 24/7, 25/7 now, or anything, that we're working on, or there's something they want, we're going to do our level best to, well, there's certainly, if we have it, they're going to have it. And if they want something, we're going to do our level best to get it to them. Um, what they want, provided it's something that we can program. So does that make sense? So I think you should also introduce the system to other platforms. Yeah, that won't happen, um, and for this reason. And I'm familiar with some. I don't want to talk poorly of any of the others. Um, I know like TradingView and there's some others. I won't mention their names, but um, a lot of them, and I'm familiar with them for sure. And a lot of them, compared to TradeStation, in my view, they're like toys. Um, and it's kind of like a plug and play, because it's always risky to stick with one. Well, we have multiple accounts. I mean, I have multiple brokerages. So TradeStation um, is our decision. We make all our decisions from here. But so I'm not really sure what you mean by risky. But the reason why we're at TradeStation, and TradeStation is a multi-billion-dollar company, so knock on wood, I don't think it's going away. But if it did, it did, and we'd have to regroup. But I'm not worried about it. But there are tools that, and in particular, this radar screen that is only. Can you introduce this for Rhythmic or for Ninja? Um, or what I was going to say is that TradeStation is the only one that has radar screen, right? So Ninja doesn't have radar screen, so we couldn't put Swing Machine, on Ninja. Now Ninja, from what I understand, now I don't know for sure, so I don't, but I think it came about from some ex TradeStation people. So the coding is a little bit similar, but I also understand, and there may be some folks here that can further expound on this, but that you can connect TradeStation to Ninja, but there might be some execution issues there. If I remember correctly, there's been various times people have done some various things because we have people that have both, right? That have TradeStation and Ninja. And one of the beautiful things, and I think Ninja you can automate your trading, but I think if you try to hook up TradeStation and do the automated trading through Ninja, there's some finger pointing back and forth. I think it really would be borne by Ninja, but any case, yeah, but it's not happening. We got so much planned, so many things that, and I'm not trying to, but I appreciate it, right? I appreciate it. But we're not trying to reach, a couple 100,000 people or something. We're not. So I'm totally okay. We got a full plate each and every year. We're very, extremely comfortable doing what we're doing with our own trading. We're extremely comfortable with Stock Market Caddy. You notice we don't, not that anybody would pay for advertising, but we don't advertise anything. We don't have any partners. It's we do all our own web work. We try to do everything ourselves, and there's something, when you can do it, you have like total control, and we can do what we want to do when we want to do it. And even from a trading standpoint, like this is always a nice time of the year. I usually take from a trading standpoint, we're still trading, but we basically, a good part of December is just kind of chilled down. And when you get to a trading point where you can, control, not just everyone wants to go out and make as much money, but it's kind of when you get to a place where you can control your income, control, at a certain point in time. I mean, I'm not at, look, you guys may be in a different place, and I don't want to limit anybody, um, but I'm not 25 anymore. And I'm not trying to get that boat in Monte Carlo, right? Been to Monte Carlo, beautiful place. Um, Years ago, stayed at the Hotel de Paris. Susan and I did, right across the street from the casino. Beautiful place. Super rich. You know, I'm not gonna be. If I was gonna have done that, I would have done it. But probably by now. So I'm probably not gonna be a billionaire. Um, Totally okay. And but maybe you are. Maybe you are. And if you guys, you got more time, so I would just say, don't limit yourself, right? Don't limit. And we do have members. I want you to know we have members. They were young, but very mature, and they are done. They you know, we helped around the edges. They used some of our tools, but they also made some very key decisions on their own part, put themselves in position, executed, and they are done. You run this on VPS up in the cloud? No, we don't. I don't. No, that may be one day, but again, we're concerned with latency, so I'd have to, we might. I've got to break away. Raul, thanks for your questions. And I want everyone to have a wonderful weekend. The YouTube session's got to come. Yeah, I got to wrap it up. I'm late. And I've got to punch up. I'll punch up this view for our annual members on the website. And everyone else, have a great weekend. I will be in anyone can call. I just hope that you visited the website. You got specific questions, before you call. You still got questions you want to call any day, 9 a.m. to 9 p.m. any day. Can be a holiday. It can be Saturday, Sunday. I'm in the office every Saturday morning. Going to be working on a number of things. Um, David in Germany, if you're listening, I'll be working on the files. David's been with us for years and has renewed, so I got to get to work on his files, get his files out. So I'll be in the office, but if anybody has got specific questions or availability on the Q schools and wants to, it's first come, first serve. We can't pencil anybody in. It's kind of like a VRBO deal, in that all we have is time, and we have to account for it. So we can't reserve any time unless it's paid for. And but if you have any questions about scheduling and Q schools for next year, or getting started, or what it entails, and you want to talk privately about that, you can always call me at 813-758-8263. If I don't pick up, it's because I'm on another phone. You can also text me or email, and you can always leave me like two dates if you want to schedule a specific time, and I'll pick one of the dates. Usually, it can accommodate, one of the two, and then I just confirm back to you, and we just go from there. So I wish everyone the best, and have a great weekend, and buckle those chin straps for next week, kids. All right, and don't forget, options expiration is the last couple of hours today, so expect things to be frenetic. Have fun. Thanks.